Good morning. We're getting back to what I think are no-brainer credit spreads on SPX, and maybe some stocks as well. We get into the latter part of the week here. Let's get some charts up. Mini short put. Okay. Charts. There we go. So we discussed a little bit yesterday after those bad earnings come out, why I said possibly this is going to be a sucker bet for bearish traders. And maybe it is. Maybe there'll be a little more downside here. But you can see we're down at the bottom of the trading range on the S&Ps. And look at the price action last night. This was as Europe opened up, and immediately the futures cratered, and the rubber band just ripped it back to the upside there. And it's just whippling here back and forth. So the open is going to be a little bit of a coin toss. Nonetheless, you can see just looking to the left there, it's in this area of support. Maybe it goes all the way down. Maybe it goes below it. We shall see. Just looking at that bottoming tail bar there in February, which is around 1100. So not in the realm of possibilities, but I mean, look at the size of these monster red bars. The other day, was a day before yesterday, I said looking for a continuation pattern. That's really not the kind of continuation pattern that I was looking for, but it's because of the size of the bars. Anyway, yesterday down and today stabilizing, even in the face of those earnings reports. Things were whipping around there after the close. So the open are probably going to be a little tricky, but nonetheless, I think markets are going to do their best to stabilize in this area. And there's a few things. I got a couple of things to show you here. Want to look at. So this is the sentiment gauge that we normally look at. And while I would really love for it to come down here, and some kind of negative day today, doesn't have to be some giant bar. I would love to see that peg down here. We're already at a minus 214 or so on the breath. I was hoping maybe a little lower, but hey, this is close enough to have a shifting bias towards short-term buy. It doesn't mean we're going back up to the highs. It just means some kind of counter trend rally. The trend is clearly down, and we'll see how this plays out over the coming days. This one down here is one that we don't look at very often, but I keep an eye on. And this is the equity put call ratio. This is the total put call ratio. So we get a broader view. It's kind of like if you were looking at ETFs and you looked at the technology ETF versus the semiconductor ETF, meaning I'm looking at the tech ETF that's very broad in technology, whereas the semiconductors, they're semiconductors. So this is equities, and you can see the option buyers on equities here are really stepping up with bearish bets in a significant way. The bands are trending down. It's through the lower bands. This is pushing down. This is at an extreme. So it's reasonable to think from a short-term perspective that things could stabilize here. Right? And so we see some signs of that. Get this to minimize. If I press the right button, it'll do that. All right. So the futures here just jiggling around at support. If you give me my preference, it goes down this morning. It takes out these lows and it starts ripping to the upside. We've got a sell setup over here on the hourly. So it comes down here. It takes out yesterday's low. Maybe it comes down here into this area here around 4,100, which should be a pretty big level. And then it begins to turn around, and we go to our 5-minute chart, our 2-minute chart, and we will be looking for some stable, things to turn around somewhat like they started to do yesterday. Could look like this, or something different. Anyway, we'll go over it intraday. You see what make away from my percent is that roll down continues to signal option traders are accepting these lower prices. You discuss the map where shifting down for today. It appears that the flow filled on the call. The market is stair stepping lower. Yes, yes, yes. Of course, we see that on the charts, and the options flow is going with it. Of course, and the note of that starting to see some chunkier call positions being added at 44.50. Right, so way up there, they start adding call positions, which, unless they're out a month from now, they're going to lose their money. Right, if they're doing this in the short term, those 44 to 4500s will lose their money in the short term. Anyway, so what I was just reading, what McGraw posted from another service, where they're following along, I guess, with their gammas and all that kind of stuff, is in alignment pretty much with what I'm saying and seeing. And so if option traders are betting up here, as I said, if they're doing it on a short-term basis, they're going to lose. But what we're going to be focused on here, and again, I looked on IB, so I think TC 2000 fixed their quotes. TC 2000 was down yesterday in the middle of the day with option quotes. But there's premium so far down here. Let's go to SPX. That I think it's a no-brainer. So we can go down to 1,050. 1,000. It's refreshing. 1,040. 1,045. All right, what did you post there, McGraw? $40.45, yes. Yeah, so we're on the same page. 40.45 down here. It'd have to break this low. It'd have to break that low. And yeah, below 4,100, absolutely. So 41.45 has got decent premium here to do that. And that premium will increase if the markets start to sell off at the open. So we'll see if that's going to happen. I didn't even look up above because I see what's below is the no-brainer trade. So I didn't even look up above to what's there. We see the juice increasing more and more to the downside, far, far away. Like weeks ago, it was shooting fish in a barrel, so to speak. The premiums were so far down below those bearish bets. Now, at some point, after maybe we get a little, we'll see if things turn around here today based on these internals, but we get some kind of retracement back up again. And I would just view that as, let's just say, the markets, institutions reloading for the next move to the downside. So even if you just look at this weekly chart of SPX, where it made the turn up here, and to get, this week to have a red bar at some point that could come down below this low, take the greater than 100% retracement concept, that's just what we look for. Just to say, okay, now that it took out that low, it's traveled that far to take out that low, go to your smaller time frame and start looking for breakdown failures, retest and reversal patterns, breakdown failures, whatever it may be that is in alignment with that bias of a greater than 100% retracement point, where things begin to make a turn and option strategies building up, our market internals guiding us that, hey, that bias seems like a pretty reasonable thing to do. All right. So look at some of the others here. Get through that wide range bar yesterday, breaking through the low here, breakdown through here, inside so far. It's all whippy and erratic, just SOH, give it a little time to, exhaust itself, let the Johnny come latelys, short it at the low. Now, that's a vertical move, which, I wish it wouldn't have done this overlapping bars, because that's going to make it more difficult to get up through there, with that resistance versus what we call a fluid movement of bars. Well, what's fluid? Like this, fluid up. There's a little overlapping bars there, and that's exactly where it stalled. But fluid, bar opens with a prior bar closes, bar opens with a prior bar closes, very little overlap. It's got, quite a bit of overlap. In any event, it's down enough. It took out the low. Option traders, blah, blah, blah. What I said just makes sense to get us some stabilization here. And now that it's being Wednesday, other than the earnings that'll come out, today and tomorrow that we have to deal with, we're closer to, Friday, 0 data expiration, and we got, SPX. And now they added SPX to Tuesday, and they're adding it, I think, correct me if I'm wrong, Dan, if I read right, or whoever, sometime in May, the middle of May, they're going to add a 0 day to SPX on Thursday. So May 11th. Thank you, McGraw. So it's like SPX heaven here. They have found that more and more traders like this product, even with the amount of leverage that it has. And, McGraw, I just had a thought. Me, and I have my thoughts in the middle. Don't take it the wrong way. Some of you kind of like, the coronavirus and the vaccines and booster things, but just take it with the levity that I offer it. It's like, hey, from my opinion, the vaccines, the boosters, they're meant, some people have this opinion, to thin the herd. Well, if they're meant to thin the herd, increasing SPX credit spreads will certainly thin the herd for those that are unknowledgeable on what to do, because they're a freaking killer. If you don't know what you're doing and you just look at those premiums, you're going to be dead financially. So it's not a product to take lightly. Right? You look at the juice and you're like, my God, look at the money that they're giving away, and before you know it, you're broke. So it's not a product to be taken lightly. But if you trade it properly, your odds of success are extremely high, right? And you have to manage it appropriately, of course. Let's continue. YM, this one has the potential to go down more than the others because it was stronger than the others. So it's got a little bit of support there. It's hanging here at the lows like everything else. I mean, even pre-market here, this is set up to make a plunge toward the pre-market low, maybe lower. Right? Yeah. All right. M2K already down there, breaking through the lows. So everything becoming more bearish, just like we like it to be. Some kind of intraday flush, would be nice to start the day, to get things, just a little bit more extended and ready for a turnaround. All right. Bitcoin, I heard them say, what, we've been talking about a correlation to this Bitcoin for a while now, but I heard somebody on CNBC today. I don't know who he is. I don't remember his name, but I guess, however, maybe they lay one chart over the other and they get their protractor out and, do some measurements with the, measuring tape and all that. He said something that had an 82 or 85% correlation to the equity markets. And so as I look at this and say, well, that certainly looks ready for a little more of a plunge to the downside. Maybe we're going to get that before it turns. So definitely keep an eye on this and set an alert at the top of that wide range bar, because if it gets up there, well, that'll be a plus. Crude oil, just hanging out. Not much to do there. Silver, maybe time to stick the toe in the water. I don't know. This bar's not done yet, but I like to see fluid. That's fluid, right? That's a picture of fluid. Doesn't get much more fluid than that. And then you get a break below the low and it springs back up again. One more day down here, buy it. Buy it down here. if this bar closes this way or a little, whatever it does, and you get another bar trading here, buy it the next day above there. You have a multiple bar stabilization. Somewhat similar. Here's gold. You know, start of the day, but broke below the low, starting to recover. We'll see what happens. And what's euro doing here? Euro. Wow. Dollar's ripping, right? Interest rates going up, which we've been looking at. The euro is within striking distance of parity with the dollar. How far back you have to go? This is when it started, way back in 2000, and that started ripping up and the market crashed. And so I guess it's pretty far from hitting that 1-to-1, but it's getting close to the support down there. As you know, the dollar, I was looking at this the other day, and some of you know that, look at that. Some of you know that my wife is from Bulgaria. So I've gone there a lot over the years. And so there was a point in time where your dollar versus leva was $2.25. So the advantage here, I'm not much of one to like to travel, but the advantage here as a US citizen where your dollar is increasing in value like that is if you live in New York and you go to Canada, right, your dollar is going to be worth so much more. I've experienced that. So wherever you might want to go, with your dollar, increasing in value as much as it is. And this is what happens when the Fed is raising interest rates and as they say, they're going to be so aggressive about it. You can go to another part of the world and just like, someone in Great Britain, it isn't like that today, but at certain points, they're like, hey, see that $1 million house over there? I like that. Let me convert my British pound and pay $500,000 for it. It's a powerful thing, currencies and exchanges. And, when your currency is increasing in value like that, and you can go somewhere else. In my case, I go to Bulgaria where things tend to be of a greater value anyway, what you get for your money. And then your money is worth 2-to-1 or better. Let's call it a no-brainer. Right. So, yeah. So what Dana is saying, it makes products more expensive to those countries that buy US products, which, if you make, coat hangers and sell them over in Europe, well, they're going to go buy coat hangers from somebody else, so I'm not moving. I never moved there, George. I mean, it's come a long way, but I don't speak Bulgarian, and I've had enough. I go there, and if there's an event, I hire an interpreter, which I can get an interpreter there that tell me everything that's being said all day long for a dinner and a couple of leva, and it's inexpensive, but you got to get them drunk anyway. And you really do. Transport's going down. And so short thing here, we're looking for some stabilization, got a little pullback on the 5-year and the 10-year. So, markets will like that. Oil's down a bit. And we saw, some metals, get taken out to the woodshed, some of those inflation things. OPX, copper coming in hard. So all of these intermarket relationships, market internals, the markets, as far as, coming down like they are, it doesn't look very encouraging from, the bullish side, but we're only talking about here, a tradable opportunity in the coming days. So we'll see how it plays out. To you, Dan.
Good morning. Yep, I totally love your scenario for the morning. If that sets up, would be wonderful. The markets, I was shocked to see the markets up so much today after seeing how they were last night. Actually, one of my first thoughts was, peace in Ukraine, but I don't think that's going to happen anytime soon. All right, we have a ton of earnings today, so let me jump right to those. Well, obviously the big ones last night. Google. Remember we were talking about selling the 2000 or even the 1970s, and I said I technically say 98% chance you're fine, and you would have been totally fine doing that. We did sell a Microsoft naked 240, just as a major support trade here. 240. Look at that. What do you think the odds of this going way down there? So that's going to be a beautiful gain at the open. Rio, as Greg said, some of these commodities got woodshed. This one's now gapping over these 2 bars, so that's actually a bull island reversal on support. So that's on my long list. I think Greg showed AA. That looks great. Look at that, gapping up to the highs and going sideways. That is a beautiful 30-minute high trade, along with any directional is a credit spread candidate. Some of these Chinese stocks here, this could be a day trade. It's in a downtrend, but bullish gap, buy setup on support. Doing nothing at the open. But if we want to start putting on our bullish playbook, there's going to be a day trade. Rumble, nasty downtrend, but gap, or maybe 30-minute high. ARLP, gap in the 7. That's gapping too big to resistance. Roku getting slammed. This is the one yesterday, Greg. I was going to short. I said target $80, but it had earnings. A lot of stocks here getting hit pretty bad. So look at this, spot 110 gapping down $12. I'll put that in a window. Another big one, Texan. Look at that, gapping to 161. That's a big ugly gap. So even though there's no pattern right now, I want to see where buyers step up at the open. Look at this FFIV. Well, I'm not showing the gap now. Look right here. It shows it down $19. So maybe that's wrong. Here, look, IQV. This is what we call a bull gap surprise. This is multiple bars down, wide range bar. We got the concept greater than 100%, gapping up from this end of day base with a price void. If this stays liquid, this is a tier 1 5-minute high trade. So, I use the word tier 1, meaning it's set up beautifully. As long as it doesn't disappoint at the open, then it's good to go. So that's a tier 1 gapper right there. And it had earnings, so I'll take a look at short puts also, but start off for a day trade. Jacopo, DDL. Yeah, I didn't. It's rare that you're going to find $5 puts. I didn't even look, but we actually bought that yesterday, Jacopo. So we're long. And CTIC is a 1, 2, 3. It's technically not a 1, 2, 3 just because of the deep retracement, but don't worry about it. You don't get too anal with things. So yeah, it's bullish. Yeah, I'll put that on the list. You like IQV? You know me, McGraws. If you give me good fundamentals on top of good technicals, then that's a plus. I don't see this gapping yet. Man H, I'll come back to you. Juniper gapping down. Now look, this one's gapping down under the 200, but at this prior low. So that's going in a window. Earnings, 30-minute high, put spread. On Teradyne gapping up, 30-minute high, maybe put spread. Texan, we looked at MKSI. Now the very first thought that pops in my mind on this daily is possible double bottom over yesterday's high. I see one print down here gapping down, but folks, this is a double bottom. Potential. We're waiting for the turn on the support, the turn. But that's the fluidity, that's the bounce. And now we're just waiting for the flavor of the retest. This, even that, we don't like shorting from the top of the range to the bottom of the range, but this is just very bearish daily, weekly. I can't tell where it's gapping, but that's on my short watch list. Teradyne, should AMAT pop? Well, I don't know, McGraw, so how do I answer that? I'd look at it. And the answer is it's not. So end of story. That's a bearish daily, weekly. All right, so yeah, Google, I'll be watching. Bravo Golf, maybe 30-minute high, we'll come back. All right, look how this Juniper popped already. Look, it popped right here into the open. It's like there were hidden orders. So, yeah, well, not a hidden order per se, but it's like somebody saying, man, I'm picking this up at $31 and it's cheaper. And then them saying, I want more at these levels. So that's off to a good start. We'll give it 5 minutes or so. A 10-minute high maybe. So that one's looking good. Here's McGraw, our IQV. That is a bullish gap surprise. It's just, I don't like the liquidity right now. And it better not run too much because, I was hoping for a 5-minute high around these levels, 213. And now look, it's $4 higher already. Still has a price point. Oh, Boeing's another one. Look at that. I saw that yesterday. I didn't know it had earnings last night, but man, oh man. Look at that bearish downtrend. I think this is going to, $1.50. Jets. Yeah, no pattern, but that's weakening. YUMC. Yeah, I like YUMC, yesterday's low. And I'd like it even better tomorrow if it closes like this, because then it's a 1, 2, 3. But yeah, YUMC. We talked about the patterns for new shorts, particularly if we're going to get a market turn. We got to be real careful on what we don't want to short extended things. And this is a candidate. This is a candidate for a new short. All right, we're getting our reversal cues popping. All right, I'm curious. All right, these Google puts, we were looking at the 2000s and the 7. I mean, there's still some juice down there. You just have to go wide. Wow, the 2000s are still $1 by $1.35. But let's keep an eye on Google. I'm having a couple of my shorts up alarms go off. So that's the market's popping here.